Earnings season is drawing to a close and it has been a less than spectacular run of corporate results. A bad weekend for the local auction market, and we're going back to the moon tonight. It's Monday, the 29th of August, 2022. Welcome to Fear and Greed, Australia's most popular business podcast. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael. I've got a shout out.
Oh, go on.
I spent the weekend skiing down in New South Wales, and I was down there with a bunch of people, and I came out on, must have been Sunday morning, and there was a guy there with his headphones in, and I glanced over at his phone. I mean, I knew him as a friend. He was listening to Fear and Greed.
Oh, really?
He was. Tony, thank you very much. If you're listening this morning, made my weekend.
Oh, well done, Tony.
Tony and Ross and Peter T.
Oh.
Great weekend of skiing. Tell you what, the weather was fantastic. Snow's good.
So hang on, you went to the snow with a group of guys and then you still managed to get up this early to do the podcast this morning. That is quite impressive.
Oh, I love Fear and Greed, Michael.
I know, and apparently so does Tony. Thanks, Tony.
Good on you, Tony.
That's great. Look, I'm excited, Sean, for a much more kind of nerdy reason. I'm very excited about this moon story that's coming up a little bit later on.
Yes, that's later in the show.
You're not going to give me any more than that now, are you?
Absolutely nothing.
Okay. All right. Thanks. Fine. Okay. After the show, there is a great interview coming up with Stephen Arnold, who we've spoken to once last year and is joining us again this time from Aorus Investment Management.
Yes. Now, Stephen invests in international companies like LVMH, Nike, Costco, and they're long-term investors. So they do a heap of research before putting any money anywhere. And he has such a depth of knowledge about some of these companies. Fascinating chat, especially if you want to invest overseas.
Yeah, absolutely. It's coming up a bit later on. But the main story this morning, Sean, we have pretty much now 90% of companies have reported their earnings. And the results have kind of been a little disappointing.
That's a pretty good description, Michael. Earnings season has just 3 days to go, and 90% by market capitalisation, that is, have reported. In terms of absolute numbers, it would be less than that. There'll be many smaller tiddlers coming through over the next 3 days or so. Fortescue still has to, that's one of the big guys that hasn't reported yet. That's coming through this week. Across the market, about 1/3 of companies have reported higher than expected earnings. About 1/4 have been below, which leaves 43% in the middle. The number for above expectations, that 1/3, is actually one of the worst half years in the past decade. About 55% of companies have recorded higher earnings, down from the average of nearly 2/3, according to AMP figures.
Tiddlers. I love the use of the term tiddlers there, Sean. In terms of individual companies, how did the different sectors perform?
Well, there's been some standout sectors and some standout companies, BHP being the obvious one, along with the massive profits from the coal companies. The retailers have been pretty mixed, some strong and others not. Some have said that the current trading since the end of June 30 has been pretty good and others haven't. Same deal with the healthcare stocks and some of the property companies. Market leader Goodman has traded flat since its result. Commonwealth Bank and CSL have both lost ground since their earnings announcements. Telstra's been a strong performer though, and some stocks, WiseTech is an example, have done really well since outlining results because basically they just reminded investors how good their business was. And in WiseTech Global's instance, it had really been sold off with other tech stocks, but it makes money every half year. It does really well. And sometimes these companies do quite well because investors think, why are we selling that off with the rest? Maybe that is one to think about.
Sean, earlier in the earnings season, you mentioned that the numbers are obviously really interesting, but what is really important is listening to what the CEOs are saying. What are they saying about the outlook?
Well, to be honest, they're not saying a great deal about the outlook because companies are just loath to give guidance because they're so unsure of what's ahead, or they're giving a wide range for guidance, like a big gap, so they're not being too specific about where they're going. They've talked a lot about labour problems. That has been a constant throughout the theme. They've talked a lot about higher input prices. That has been another constant throughout the period. Some companies have been able to pass on prices. The building materials companies are a good example of that. Some of those guys out of the US as well, some of the companies that operate in the US, have really been able to pass prices through. So that's been another constant theme. That's all really important because that's actually what shares trade on. It's about the future, not what's happened. So whilst there has been some good numbers over the past couple of months, and they have been able to push prices through. Really, companies don't want to give much guidance. And so what that means is that the future is unclear. And in a sense, that's probably the bottom line this earnings season. The future is unclear.
Yeah, and that's, if you're an investor, is a very good reason then to make sure you're getting professional advice before making investment decisions. Sean, how did the local market end up on Friday?
The S&P ASX 200 rose 0.8% to close at 7,104 points. There was a bunch of sectors that did well: energy, materials, healthcare, consumer staples. Only telcos went backwards. Among the large caps, CSL, Goodman Group and QBE Insurance all jumped around 2%, while Fortescue Metals was up 4%. And as I mentioned earlier on, it hasn't actually reported its full year results yet. It was a good day for the banks, the other big miners and the retailers. Best performer on Friday was Bega Cheese. It gained almost 12% on its earnings report. Qantas was another big mover, adding more than 6.5% on top of a good day last Thursday when it reported its annual results. At the other end of the market, the worst performer was biotech company PolyNovo. It dropped almost 19% on the back of its earnings announcement. Revenue was up more than 40%, but the company, which specialises in wound and burn treatments, still reported a loss, falling short of analyst predictions.
And international markets, I know there was a lot of attention on what was happening in the US.
It was a pretty scary weekend. In fact, it turned out to be the US and Europe. First, US Federal Reserve Chair Jerome Powell made it clear in a speech at Jackson Hole, Wyoming, that rates in the world's largest economy are going up, and they're likely to stay high for a while to get control of inflation. And if a recession is a byproduct, then the US will have a recession. That triggered a big fall on Wall Street, with the S&P 500 down 3.4%, its worst day since mid-June. The tech-heavy Nasdaq tumbled 4%. It suggests that the ASX today will drop. Bloomberg's actually running a story saying that in just 8 minutes, Chairman Powell managed to knock off about $78 billion from the fortunes of the richest Americans. Elon Musk, for example, lost about $5.5 billion. Ooh. We can't make light of this, Michael. This is serious because across the Atlantic in Europe, the European central bank policymakers are just as determined to lift interest rates because inflation is uncomfortably high, and they want people to have confidence in their ability to bring price rises back down. Now, the ECB have only lifted rates by 50 basis points, but over the weekend they made it clear they're going to go again and again, maybe in 50 basis point hikes, maybe in 75 basis point hikes. And they didn't shy away from the prospect of a recession either. Even if that hits Europe, which now seems likely, they're still going to lift rates. So you have two of the big powerhouses of the global economy, the US and Europe, saying rates are rising even if there is a recession.
All right, we'll be back in a moment with the rest of the day's business news. Sean, it's a big week for the federal government with the Jobs and Skills Summit being held in Canberra on Thursday and Friday.
Yes, and yesterday Treasurer Jim Chalmers was at pains to say easing the migration cap shouldn't come at the expense of training up the workforce. The Business Council of Australia want to boost the permanent migration cap to 220,000 for the next couple of years to make up for the shortfall during the pandemic. Also front and centre will be discussion around sector-wide wage bargaining, something the Business Council is not a fan of. Multi-employer pay deals are being pushed by unions, and something Dr. Chalmers sounds sympathetic to. What everyone seems to agree ahead of the summit is the need to fix the enterprise bargaining system.
And Sean, just while we're on jobs, the Victorian Labor state government has promised free university for nurses and midwives.
That's right. Premier Daniel Andrews said the state will pay the full 16,500 HECS bill for students who commit to work in a Victorian state public hospital. Sounds like a good idea to me. It was a pledge which the Victorian opposition immediately matched. Who would have thought there's an election 3 months away, Michael?
Now, Sean, it was the last weekend of winter. We are now heading into spring at last, but auction clearance rates fell sharply over the weekend, providing strong evidence that the recent signs that the market might be bottoming are misleading.
The CoreLogic preliminary clearance rates weren't great. Sydney fell sharply to under 57%. Melbourne was at 61%. Brisbane was at 42%. Nationwide, the figure was 59%. Now, there was a big jump in auction numbers, and that contributed to the lower clearance rates. But all those signs that we thought maybe things weren't going to get much worse? Weekend didn't suggest that at all. Market watchers say buyers are being driven by a fear of paying too much, which is pretty rational in a falling market. The big test, of course, comes over the next 3 months, the spring selling season, which is the busiest time of the year. By the end of that, we'll really know what's going on in the property market, Michael.
Yeah, sure will. Just a quick one, Sean. Defence Minister and Deputy Prime Minister Richard Marles is heading to Europe this week to deepen defence ties with several countries.
He'll visit his counterparts in France, Germany and Britain, and yesterday said the war in Ukraine had increased the importance of cooperation between like-minded countries.
Sean, this is a good one. Wesfarmers is confident that any economic downturn won't hurt its major retailers, Bunnings and Kmart, because when people tighten their belts, they turn to DIY projects.
I thought of you immediately when this story came up.
That's why I'm laughing while we say this, because DIY and Michael Thompson do not go well together.
Look, DIY and Sean Aylmer don't work either. It's a poor marriage. I thought we'd gotten over the whole DIY project phase, but apparently not, because Wesfarmers boss Rob Scott, he doesn't think so, and he reckons Bunnings will perform well this year, as will Kmart, as people look for bargains. It's already happening with trading so far this financial year, particularly strong at the Kmart Group, which includes Target. Mr. Scott was speaking after outlining a $2.35 billion profit, which was better than expected, and a higher dividend. Now, Michael, Wesfarmers is a massive company and it goes across mining and retailing. Bunnings is actually its biggest contributor in terms of profit. Mr. Scott warned of continued staff absenteeism and rising costs, putting pressure on the business though.
Sean, Ramsay Healthcare on Friday reported a 25% drop in profit for the last financial year and cut its dividends. But the real damage came when private equity giant KKR said it was pulling its $28 billion bid for the global hospital operator.
This courtship's been going on for more than a year, and while Ramsay hasn't quite been left at the altar, KKR said it wants to discuss an alternate deal. There's certainly no marriage anytime soon.
Oh, well done. That's why. Altar, courtship, marriage, just glorious. Please go on.
I thought hard about that one.
Oh, well done.
One of the main obstacles was Ramsay's 53% ownership in a French hospital company. Ramsay's share price fell 3.3% on Friday, so it closed at $70.50. That's well below KKR's offer of $88 a share.
And finally, Lynas Rare Earths has reported a record profit of $540 million on the back of much higher prices for rare earth oxides.
Essentially, the average price it receives doubled. Not bad. Lynas is the largest non-Chinese rare earths supplier in the world, and it plans to use all that money it's making to invest heavily in new production.
Sean, moving on to overseas news now, and 2 US Navy warships are sailing through international waters in the Taiwan Strait, according to Reuters. The first such operation since heightened tension with China over US House Speaker Nancy Pelosi's visit to Taiwan.
The guided missile cruisers conducted a routine transit through a corridor of the strait belonging to no one, the US fleet commander said. Not that Beijing thinks it's neutral territory. In fact, the Chinese military followed the US cruisers, and the People's Liberation Army, in a statement, said it was on high alert to defeat any provocations. The Biden administration has said it will continue such transits. It's just amping up the agitation between the two countries at the moment.
Yeah, sure is. How about this one? A 1985 Ford Escort RS Turbo Series 1 with less than 25,000 miles on the clock has just sold in the UK for £724,500. That's a lot of money.
And it's sold for that much because it used to be driven by Princess Diana.
Oh, that'll do it.
The auction over the weekend comes 25 years after the princess died in a limousine that crashed in Paris as she was trying to escape the paparazzi. Lady Di was often seen driving the car around Chelsea and Kensington. The car had multiple other owners before ending up back at Ford, but I bet they didn't realise the value.
I'm sure they didn't. And finally, Sean, this is the story that you basically made me wait the entire podcast to talk about. We are going back to the moon with NASA's Artemis 1 launch scheduled for tonight, but it is weather permitting.
I love the fact that no matter how technically advanced society is, we still have to worry about the weather.
It's a very good point, isn't it?
It's a real leveler. I think it's great. Artemis 1 is the biggest rocket launch in history and part of the program to get the first woman and the first person of colour, as NASA puts it, on the moon by 2025. Now, the unmanned craft will travel 1.3 million miles over 42 days. The work done in space will be used to help send the first humans to Mars, according to NASA Administrator Bill Nelson. It's due to go late tonight, Australian time, weather permitting.
Weather permitting, very important. And Sean, look, if you've got 5 minutes to spare, can I recommend a video on YouTube? And it's about 3 years old now. It's actually on the NASA channel on YouTube. If you just search for how we are going to the moon, and it's 5 minutes that explains everything about the Artemis mission and kind of then how it will be used for the kind of subsequent Mars missions and everything. It is fantastic. And the music is outstanding. It's like a little kind of like an action movie, a sci-fi movie. It's just great. How we are going to the moon. Check that one out on YouTube. That is my tip for today.
I have it here in front of me. Once we finish the podcast, first thing I'll do.
Oh, it is great. Anyway, actually, before you watch the video, Sean, first listen to the Fear and Greed Daily interview, which is coming up next. That is with Stephen Arnold from Aorus Investment Management.
Of course I'd do that. As I mentioned at the top of the show, all about international shares, famous companies. Get onto that one. This is pre-Michael's NASA video. Also, there's another one that everyone has to listen to before they get onto your video too. The Kook.
That is the week ahead with our resident economist, Stephen Koukoulas, and he's pretty excited about this week.
Oh, lots of economic data out this week. Not anything huge, but lots of bits and pieces about, around building and retail and of course, house prices. Stephen loves that sort of stuff when you get lots of bits and pieces of data.
All right. Okay. Now, I know I've made a bit of a mess of things, so let's just make this abundantly clear. Up next, Stephen Arnold from Aorus Investment Management. Then the week ahead featuring Stephen Koukoulas. And then how we are going to the moon on the NASA channel on YouTube. Is that crystal clear?
Crystal clear.
Excellent. Thank you, Sean.
Thank you, Michael.
It's Monday, the 29th of August, 2022. Make sure you're following the podcast and join us online on LinkedIn, Twitter, and Facebook. I'm Michael Thompson, and that was Fear and Greed. Have a great day.